I'm Adam Myers, and joining me today is Amy Pham, the Portfolio Manager for the Pengana High Conviction Property Securities Fund. Amy, 2023 was unsurprisingly a very challenging year for real estate investors, and as an A-REIT investor, you didn't really have anywhere to hide. And yet, investors in your fund had a different experience to those who invest in the broader index. So can you please tell us a little bit about your strategy and how you navigated such a challenging year?
Sure. We are a high conviction fund, which means that we can be very selective in what we invest in. Our strategy is to invest in REITs with high quality of management, quality of assets, and resilience in earnings. So that put us in a great stead for the majority of the year, where we dramatically outperformed the index. However, we gave that back towards the end of the year when the sector had a huge rally, but we still were very much ahead of the year.
Okay, ahead of the benchmark for the year.
Yeah.
Okay, so that's the portfolio as a whole. I'm assuming, like all portfolios, you had real winners and those that didn't necessarily go your way. Can you tell us a little bit about those that outperformed and underperformed?
Sure. The stocks that worked for us particularly was the data center stock that we invest in. It's NextDC, and they are Australia's largest owner and operator of data centers. The reason that we like the stock is that it's leveraged to cloud computing and also AI, which is a big topic of last year and also in the next 5 years as well. We also invested in Stockland, which is a resi developer. That did really well for us, and also the large retail mall owner that owns Westfield Centres, that also did well for us. The stocks that we didn't benefit from included Qualitas. They are a fund manager and specializes in credit lending to real estate, and also the healthcare rate. But we think that these two stocks, we're still very happy with them. We think that they're newly listed stocks, and so the market actually wants more of a track record from them. And leading into this reporting season, we are confident that these two stocks are able to deliver above market earnings growth.
Okay, great. And as you alluded to earlier, the year very much finished on a high note. So does that set us up well for a strong 2024? Absolutely.
I think that with rates stabilizing and the market is now fully factoring in that the expectation that rates will fall from here, that will benefit the operational environment for the sector. So when you look at, in terms of what's holding the sector back in the last 3 years, is that cost of debt has doubled. And also that impacted the valuations as well of a lot of these REITs. So once rate starts to stabilize and also looking to come down from here, we think that would be very supportive for the sector. Now, having said that, I don't think that it would be a matter of a rising tides lifting all boats. I think that there's going to be still volatility in the market, because we're not only 2024 is not going to be fighting inflation. It's about inflation still remains quite high above the RBA's target. So companies will have to really balance between inflation and growth. And we think that the companies that will come out ahead are the ones that are able to position themselves for the next growth phase. And the only reason they can do that is that they have a strong balance sheet, and also they have access to third-party capital. And when you look at the sector, there's only a handful of stocks that that are in this category. So absolutely, you still have to do a lot of your homework and identify these companies.
Great, thanks Amy, and thanks for taking the time to watch this update. If you would like more information from Amy, please subscribe to her monthly updates, which are available on our website.